When it comes to dividend stock investing, there are two ways you can invest. You can either invest in individual stocks known as single stock picking, or of course other ways through ETFs or exchange traded funds, which allow you to invest in a basket or an entire index of stocks through one simple investment vehicle. Now in this video, we are going to go over and in depth what I think might be the best dividend growth stock ETF of all time. So stay tuned until the end. Now over my years of investing, I have found that investing into ETFs is seriously the way to go, at least for a majority of investors, at least in my humble opinion. Now there are several obvious reasons why people choose to invest in ETFs over single picking stocks. ETFs in general offer diversification. ETFs typically hold a basket of stocks from different companies or industries, providing investors with exposure to a diverse range of assets. This can help reduce risks in their portfolios. In a situation as a downturn in one stock or industry may be offset by gains in others. For the newer investors out there, I always urge to take diversification very seriously. ETFs also in general don't cost that much to buy into. ETFs often have low management fees compared to something like an actively managed mutual fund or hiring on some wealth management firm. ETFs are a very cost-effective way to go in most cases. ETFs also offer convenience. Investing into ETFs can be an efficient way to gain exposure to a particular sector, market, or strategy without having to research and buy all the individual stocks. And with that, ETFs can still be traded just like any other individual stock, making them easy to buy and sell depending on where you're at during your investing journey. Now, as I'm sure you already see in the title of this video, the ETF that we are going to be going over is the SCHD, or the Schwab US Dividend Equity ETF. Now, SCHD is a passively managed fund that seeks to track the performance of the Dow Jones US Dividend 100 Index. The SCHD ETF is designed to provide investors with exposure to high-quality U.S. dividend-paying stocks. This fund focuses on companies that have a strong history of paying dividends and companies that have the potential for growing their dividends over time. The ETF is composed of a diverse basket of large-cap U.S. stocks with a heavy emphasis on things like consumer staples, healthcare, industrial sector, and more. The fund's holdings are weighted by the total dividends paid by each company. So companies with higher dividend payments have a larger allocation in the portfolio. Now, one of the reasons SCHD is so great is because it seeks to provide investors with a low-cost exposure to a diversified portfolio of very high-quality U.S. dividend-paying stocks. The expense ratio is one of the lowest across the entire industry, making it a very accessible option and an option that dividend investors from all over the place absolutely love. Looking a little bit closer into some of SCHD's fundamentals. SCHD is currently up around 171% as far as just the share price of the ETF. SCHD offers a 0.06 expense ratio, which is one of the lowest expense ratios you're going to find, especially for a high quality ETF like this. Which means by buying into this ETF, into this fund, investors are going to be able to keep the majority of all their money. Now, SCHD pays a dividend on a quarterly basis and has $45.53 billion in assets under management. SCHD has a trailing 12-month dividend yield of 3.74%, which is definitely on the higher, juicier end of the spectrum, especially considering how much SCHD does appreciate in share price. And on top of that, SCHD has a 15.56% 5-year growth rate, which basically means, at least historically speaking, SCHD has a history of raising their dividend year over year extremely fast, which simply means investors can assume that over time they are going to be getting pay raises consistently if they invest into a fund like SCHD. Looking a little bit closer into that awesome dividend history for SCHD, if you look back in 2013, 2012, etc., SCHD was paying their shareholders around 12 to maybe 20 cents or so per share per quarter. Fast forward just around 10 years, and now SCHD shareholders are getting around 60 to 70 cents per share per quarter. So for those investors back then that bought into this fund and just held, they are receiving not double, not triple, almost quadruple or 5 times as much paid out in dividends to their portfolio every single quarter just for being a long-term shareholder. Now, one of my favorite things about the SCHD ETF is the total return that the fund has returned over the last several years. If you go to pretty much any time frame, SCHD's total return, which is share price plus the dividend, is even beating the S&P 500. And keep in mind the S&P 500 is one of the benchmarks that's almost impossible to beat. Over the last 5-year time frame, SCHD returned 72.6%, where the S&P returned 68.49%. Over the last 3 years, SCHD 53.39%, where the S&P brought in 47.57% return. So one of the awesome things that SCHD does provide is a share price appreciation, most likely, and on top of that, a nice starting dividend yield, which is also going to grow over the long term. Looking into SCHD's holdings breakdown, you can see the fund is very diversified, with 17.6% in industrials, healthcare 16%, consumer defense 14%, financials 13%, technology 11%, consumer cyclical 9%, energy 9%, communication 4%, basic materials 2%, and utilities 0.2%. The fund is very diversified, and the top 10 holdings are very familiar and known as some of the highest quality stocks in the market if you ask many investors. We have the top 10 holdings: Pepsi, Merck, Coca-Cola, Verizon, abbvie, the Home Depot, Amgen, Broadcom, Chevron, and Pfizer. But keep in mind, every so often, these top 10 holdings are going to change. But you can be assured that because SCHD does have the strategy it has, it's going to continuously buy into names that not only have a high starting dividend yield, but also have a history of raising their dividends consistently. Now, we have all, of course, heard about the power of compounding and how when it comes to dividend investing, compounding is the way that investors get very, very rich, especially if they stay in the market over the long term. If we plug in into this dividend calculator, all of SCHD's stats, which is a 3.74% initial annual dividend yield, a 15.56% annual dividend increase, a $50,000 starting balance, and 0 contributions per year, which means this investor in theory would not add a single penny into this portfolio, although this investor in theory would have drip turned on, which means that all the dividends would be reinvested into more shares of SCHD over the long term. So if we plug all this in, here's the numbers that we get. The first year, SCHD's the $50,000 principal would generate around $1,896 in annual dividends. Now, the yield on cost is also going to be going up extremely high because SCHD raises their dividends very, very quickly. By year number 2, $53,000 at a $2,200 annual dividend amount. But skipping down a little bit, by year number 10, $103,000 worth of SCHD and already up to $11,000 plus in annual dividends. By year number 15, this portfolio, which started at $50,000, would now be paying over $41,000 annual dividends. And as you see, the compounding effect starts to really, really kick in, pretty much after 10 years on. By year number 20, this portfolio would already be generating over $193,000. And by year number 30, this portfolio in theory would be generating over $65 million in annual dividend income. So there we have it. Those are a few reasons on why I think that the SCHD ETF is one of the best, if not the best, dividend growth ETFs across the entire stock market. SCHD has a lot to offer for pretty much any investor out there, especially investors that are interested in dividends and overall capital appreciation at the same time. But I want to hear from you guys down below. Do you think SCHD is the end-all be-all dividend growth ETF? Or is there a better, higher quality dividend ETF that you guys want me to go through? If you haven't done so already, make sure to please drop a like in this video if you enjoyed it and subscribe for more content like this in the future. We'll see you guys in the next video.